When you think about what makes your business valuable, you often think of your equipment, your inventory, or maybe your building. What if I told you that more often than not, the most valuable part of your company might be something you can't even touch, your intangible assets? Ignoring them could mean seriously undervaluing your business, especially when it's time to sell, bring on investors, or plan for the future. So what are intangible assets? Think of things like your brand reputation, customer relationships, proprietary processes, software, or even your team's know-how. These aren't things you can stick a price tag on at first glance because they don't show up in the balance sheet the same way machinery and equipment or buildings do. But they can have a huge impact on how your business performs and how it's valued. A few common examples of intangible assets are brand recognition that keeps customers coming back, long-term contracts that create predictable revenue, custom software or systems that give you a competitive edge, a loyal customer base, proprietary processes or know-how that streamline operations. When it comes time to sell your business, transfer ownership, or secure financing, buyers and investors will look far beyond your balance sheet. They want to know what makes your company sustainable and scalable, and that's where intangible assets come in. So for example, imagine two similar businesses, same industry, same annual revenue. One of them has built a strong brand, developed a unique piece of technology, and locked in recurring customer relationships. The other hasn't. The first one is almost always going to be more attractive to buyers and command a higher price, not because of what you can see, but because of what you can't. Now, valuing these assets isn't as straightforward as pricing a truck or a warehouse. It takes expertise. There are different approaches that professionals like those at PCE use, such as looking at replacement cost, projected income, or market comparisons. Each method is suited to different types of assets and business models. To learn more about these valuation methodologies, check the link in the description. But for the purpose of this video, the biggest takeaway is this. If you're planning for an eventual sale, thinking about succession, or even just trying to grow strategically, you may need to know the full value of your business, including your intangible assets. This will help you make smarter decisions, negotiate a better price, and plan with confidence. Whether you are a financial executive of a company or a business owner and you haven't thought about how your intangibles factor into your company's value, now is the time. At PCE, we're experts in these types of valuations.